Welcome to Trading Nation. Let's take a look at one market that has been hot that may be showing signs of cracking. China, specifically the Shanghai Composite. That index not down a lot, down 2% in the last week alone. But what does the chart show? And what do we think about China? Max Wolff and Matt Maley are your Trading Nation team today. Matt Maley of Miller Tabak, in a note you put out this morning, you highlighted the charts. It doesn't look terrible, but there are some concerning signs. What are you seeing?
Well, it's just that like you said, it's not a major thing. I mean, you look at where the index bottomed back in 2016, and you draw the trend line from there. It's still well above that line, but it is below its trend line from this May. So it's a little over 6 months. It's broken below that, and it's also breaking below the bottom end of what's called a broadening top formation or a mega formation. These formations are quite rare, and the fact that it's breaking below that's a little bit of a concern. And the main reason for that, of course, is that we've had this issue with China talking about deleveraging their system, at least somewhat. And we saw that at the beginning, in the spring when the Shanghai fell in the March to May timeframe, and the bond market fell as well when interest rates went from 3.2% to 3.7%. Well, now that their national Congress is behind them, they seem to be back on that trail of deleveraging. And we've seen, again, rates shoot up almost to 4% in the last couple of weeks, and the stock market roll back over. So, again, it's not a major thing yet, but if it continues lower, we get deleveraging in China at the same time the Fed is shrinking its balance sheet and the ECB is going to taper back in 2018. There's some reasons that of concern. It's not even a yellow flag yet, but something to keep an eye on.
Yeah, it's something to watch. We like to be early. Max Wolff of the Phoenix Group, is there anything about China that concerns you, or is this going to be one of those little bumps that just leads to new highs as more people pile in?
So we see it as a consolidation on the fundamental side. Clearly, China's had a pretty good run until fairly recently. That being said, there were these sort of hangovers, which have been with us a long time, about the ability to organically sustain the growth rate. Occasionally, there are questions about the veracity of the numbers around the GDP growth reports that we get. And there's this sort of bad debt, public debt story that doesn't go away. We do think eventually we're going to have to deal with that. But we do think there's a pattern here that's pretty clear, and that is when you get the really politically dicey business behind you and you consolidate power, you talk about rating in excesses, you talk about greater equality, you talk about tamping down excesses in the financial markets, and then if that doesn't quickly not disturb growth, in other words, if you have the usual dip in growth, you put your foot back on the gas, the growth comes right back up. So I don't think we expect that to break down. And just so we're clear here, the U.S. has done exactly the same thing, so hard for us to cast rocks in that direction.
Fair enough. Max Wolff and Matt Maley, we are watching China. Nothing to be real concerned about yet, but something that is important to the global markets. So thank you both. And folks, thank you as always for watching Trading Nation. I'm Brian Sullivan, and we'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.